Hey everybody, Smart Silver Stacker here. Hope you're doing well. Wow, what a finish to the week for the silver market. The silver price closed above $38 today for the first time in 14 years. You've got to go all the way back to 2011 to find a time when the silver price was higher than it is today. 2011, by the way, the year that the silver price hit $50 an ounce. And based on something that Donald Trump just said, it looks like the metals may be headed much higher from here. This bull run could just be getting started. So let's get to it.
The worst day on Wall Street since the crash of 1987.
We're now down 43%.
This could be the most serious recession in decades.
Protect your retirement with gold and silver IRAs. Learn more at sdbullion.com/IRA. So I do want to get into what Donald Trump just said about U.S. monetary policy, which sounds like it could light the mother of all bull markets off for silver. But let's just talk a bit about this technical breakout, and then we'll get into that. So there's a lot of factors that are driving silver higher at the moment. You've got copper had a major breakout earlier this week, hit a new record all-time high on the back of an announcement regarding U.S. tariffs on copper set to go into effect in August. We talked about that in yesterday's video, actually. We were calling for a breakout in silver, you might recall, about 24 hours ago. And today we got exactly that. So this should come as no surprise to viewers of this channel. And just a quick recap on what's been going on in silver. Back in early June, silver broke out of an ascending triangle pattern on its longer term chart, a triangle pattern that goes all the way back to 2020. We've been following that breakout action, and since that breakout, silver has repeatedly retested the breakout level, but every time it has done so, it has been met by strong buying, and it's been consolidating in this narrowing pattern. Well, today it broke out of that consolidation, and that confirms the larger breakout from the ascending triangle. So this is a very bullish development for silver just from a technical standpoint. Now, in the short term, maybe we'll see a little pullback. I mean, today's run up was pretty sharp. We may retest the breakout level. That's kind of in the low $37 range, but there's certainly no guarantee that that will take place. There's also the backdrop of escalating geopolitical issues around the world. You've got the war in Eastern Europe that is intensifying. You've got the Houthis sinking ships again in the Middle East, so that may kick off again at any point. And you've got China eyeballing Taiwan, practicing blockades. So there's a lot of geopolitical risk here as well. There's also the ongoing program of de-dollarization by the BRICS nations. And then you've got the growing U.S. debt, over $37 trillion now, the big beautiful bill, the budget that just passed, which according to the CBO's most recent estimate is going to contribute an additional $3.4 trillion in deficit spending between now and 2034 compared to the already massive deficits which were already baked into the cake. So the debts and deficit problem is getting much worse. But here's the thing that Trump is discussing now, which I believe could send silver and really all hard assets, I mean, gold, platinum, palladium, they're likely to be moving much higher as well if this plays out the way that it's looking like it may go now. Hey, by the way, the other precious metals had a pretty good day today as well. Gold was up slightly, but palladium was up, I think, over 6%. Platinum was up in a big way as well. So all of the metals are starting to wake up here. And now we all know that Trump has been very critical of Fed Chair Jerome Powell thus far. He's come up with all sorts of names for him. I think the most recent one is too late Powell. He's called him all sorts of insulting names, saying that he really needs to cut rates. He needs to have easier monetary policy, that inflation is under control and we need more money printing and easier money here in the U.S. I mean, this has been going on for months, but it looks like now Trump may actually have some leverage over Powell. So Powell's term is over in about 10 months. So if Trump just wants to wait him out, he's got to wait until mid-2026 to get a replacement in there. And he's already told us that anyone who is appointed as the Fed chair as a replacement to Powell will be required, that a prerequisite of getting the position is that you want to cut, right? So you need to be a dovish Fed chairperson at this point to be put into that office. We already know that. But there's this issue with Powell now, which has arisen as a result of his testimony before Congress in regards to renovations at the Fed, of all things. I mean, I guess the Fed has this $2.5 billion renovation project, and he was talking about it before Congress, and he said that there wouldn't be special elevators, there wouldn't be special dining areas, there wouldn't be rooftop gardens. I mean, these are quotes. This sounds like weird stuff, but that's what he said before Congress. And turns out, according to the plans for the building, there actually will be all of those things. So not a very good look for Powell. You know, $2.5 billion in renovations, probably the smallest sum that the Fed has ever stolen from the American people. I mean, they're responsible for a lot more than that. So it seems almost ironic and comical that Powell would be getting put under the spotlight for lying about that. I mean, he lies at pretty much every FOMC press conference that there is, but nobody seems to mind that. It's just that, you know, if he's not cutting rates fast enough and he's not making the expansion of the debt easier fast enough, that now we got to get him on this sort of technicality. And I know it's not really a technicality, but come on. I mean, the central bankers have done a lot more than lie about renovations. That is the situation, though, that Trump has kind of got Powell, it seems like, maybe by the short hairs here, and he may be able to use this investigation into Powell regarding these statements that he made about renovations as a way to accelerate his exit from the Federal Reserve. And what Trump said that really, I think, is going to be bullish for the metals, not great for the dollar, is that he thinks interest rates should be a full 3 points lower. So right now, the federal funds rate is between 425 and 525 basis points. And typically, if the Federal Reserve does anything, they've been cutting 25 basis points at a time. Maybe we might get 50 basis points if the Fed really wanted to be stimulative. But what Trump is discussing is a full 300 basis point rate cut to the federal funds rate. That is like a bazooka stimulus, right? Compared to what the Fed has been doing. And so if Trump gets his way and he's able to remove Powell from office based on this testimony that Powell gave before Congress that was misleading, and I guess, you know, a violation of the central banker's ethics. Sorry if I chuckle at that terminology. But if he's able to get him out, then he may put some replacement in who will immediately slash rates by a very significant amount. I mean, he said he thinks it should immediately be cut 3 points. And if that happened, well, yeah, it'd be good for silver. It'd be good for a lot of asset valuations. In fact, you'd probably see the stock market valuations explode higher in such an event as well. And that's probably what Donald Trump wants, right? Because he's not really a fiscal conservative. He's kind of this populist who wants to inflate asset values. I mean, that's what it sounds like to me anyway, based on that statement, that we need, you know, much easier interest rates. And that will drive asset valuations up. It's going to bring inflation back with a vengeance. You know, back in Venezuela during their hyperinflation, they had an amazing stock market. Their stock market went up by enormous multiples as the Bolivar was devalued. Now, I'm not saying that's a perfect analogy to the current situation. Obviously, the US dollar and the Bolivar are very different. The dollar is still the world reserve currency, but we could see an analogous situation in that asset valuations will blow up as the dollar is debased. And here's the thing, if you really want to run up massive amounts of debt, the only way to ultimately pay them off is to debase the currency. That is why nations typically go in this cycle where they get to an unsustainable level of debt, and then the currency is the real victim of that, because you get the central bank who comes in, they begin buying debt directly from the government. And if you think that, you know, 300 basis point rate cuts or something, just wait until the Fed begins QE. But think about this. I mean, right now, ostensibly, we have this strong economy, everything's hunky-dory. Imagine if you have some ultra dove at the Fed whenever the next financial crisis kicks off, and it's probably not far away. I mean, that's probably part of why Trump wants the rates to be cut so much, is to try to stave that off. But ultimately, with the types of debt that have accumulated here in the US and really just all around the world, it's going to take a lot more than rate cuts ultimately to keep the system afloat. But, you know, it's going to be real helicopter money next time. And we're talking stimulus checks, direct cash injections into the economy, the Fed loading up on U.S. debt. That's ultimately where we're headed. But even just this potential for 3% rate cuts, that alone will be enough to send silver easily to record all-time nominal highs above $50. I mean, we might even be on the way there with no stimulus whatsoever, and a real program of major rate cuts, and ultimately, if we get to it, quantitative easing, that will send the silver price to real all-time highs in inflation-adjusted terms, and that means at a bare minimum, triple-digit silver. So leave me a comment down below to let me know what you think. Stay safe and happy stacking, everybody. Thanks for watching. I'll catch you next time. Smart Silver Stacker, out.